Hey everyone, and welcome. Sometimes the most incredible stories are hiding in places you'd never expect, like a corporate press release. Today, we're going to crack one of those open and see exactly how a massive, brand new community actually gets built, and more importantly, paid for. Let's get right into it. So, let's start with the big, flashy number right up front. $31 million. I mean, that is a huge figure. When you see a number that big, your first thought is probably a lottery jackpot or maybe a Hollywood movie budget, right? Well, in this case, it's the key that unlocks an entire community. But what for exactly? And there's our answer. That $31 million, it's a loan, and it's for a 160-unit luxury senior living community. So we're not talking about just any old apartment building here. This is something much more specialized and, well, high-end. So what does that actually look like? Okay, so what does 31 million bucks really get you when it comes to a luxury community? Let's, metaphorically step inside and see what kinds of services and spaces make this place tick. First off, this isn't just one-size-fits-all housing. It's a multi-level care facility, and that is a huge part of its appeal. You've got independent living for seniors who are still very active, assisted living for folks who need a bit more help, and even specialized memory care. What this really means is that residents can age in place. They can stay right there in the community even as their needs change over the years. And the apartments themselves, well, there's a lot of variety there too. They have everything from a cozy 410 square foot studio all the way up to a pretty spacious 2-bedroom apartment that's nearly 1,000 square feet. That range opens the door for different budgets and different lifestyles, whether it's for a single person or a couple. But honestly, it's the amenities that really make it feel like a luxury spot. I'm not just talking about a workout room in the basement. We're talking a full fitness center, a club room, its own movie theater. And then you have lounges, a library, a hair salon. It's all designed to be this self-contained, vibrant place to live. Really, it's less like an apartment complex and more like a permanent resort. And of course, a place like this isn't just dropped in the middle of nowhere. The location is totally strategic. It's built near parks and shopping with a straight shot to downtown Minneapolis. This is so important for keeping residents connected, whether they just want to take a walk or head into the city. All right, so we've had a look around the building, and it's pretty impressive. But how does something on this scale actually get paid for? In this next part, we're going to break down that $31 million loan. It's time to follow the money. So the first, most obvious question is, wait a minute, if the building's already standing there, why does it suddenly need a massive loan now? It feels a little backward, right? And here's the answer. It's to retire the existing construction financing. Think about it like this. First, a developer gets a short-term, usually higher interest loan just to physically build the thing. But once it's up and running and people can move in, they get a new, more stable, long-term loan to pay off that first construction loan, and that is exactly what's happening here. Now, there is a super important detail about this new loan. It is a non-recourse loan. So what on earth does that mean? Well, simply put, if the developer can't pay it back, the lender can only take the property itself. That's it. They can't go after the developer's bank accounts or other buildings. It's a huge layer of protection, and it's what makes these massive deals even possible. The structure of the loan itself is also pretty clever. It's split into 2 phases. For the first little while, there's an interest-only period. This keeps the payments really low at the start, which gives the community time to fill up with residents and get its income flowing. After that, it switches to a 5-year term where they start paying down the main loan amount. That part has a floating interest rate, which means it can change with the market. A little bit of risk, but also some potential reward. A $31 million deal doesn't just happen because of some paperwork. It's all about people and partnerships. So let's take a look at the key players who actually made this whole thing happen. So you've got 2 main players here. On one side, there's EBSC lending. They're the ones who arrange the money. They are the lender. On the other side, you have the sponsor. In the world of real estate finance, that's just the fancy term for the property owner and developer. So EBSC provides the cash, and the sponsor uses it to refinance their brand new community. Simple as that. And this quote from the sponsor, David Ross, it really says everything you need to know. He says they've been great partners for a number of years, and that they value the firm-wide relationship. See, this wasn't just a one-time thing. It proves that in big-time finance, trust and a good history are just as important as the money itself. So we've seen the community, we've followed the money, we've met the partners. But why should we care about this one deal in Minnesota? Let's zoom out a little bit and see why this actually matters in the grand scheme of things. And here's the real takeaway. This deal, it's basically a blueprint. This two-step process, get a short-term loan to build, then get a long-term loan once it's stable, that's not unique at all. It is the fundamental way that skyscrapers, shopping malls, and huge communities get built all over the world. So let's just recap the big ideas really quickly. 1. Huge projects almost always have different stages of financing. 2. This focus on luxury senior living is no accident. It's a massive growth sector for investors. 3. Financial tools like that non-recourse loan are all about managing risk for the borrower. And 4, and maybe most important, behind every giant number, there are real people and strong long-term partnerships. So I'll leave you with this final thought. Next time you're driving through your town and you see a new apartment building or a big commercial center going up, think about the incredible web of financing and partnerships that had to come together to make that possible. How many of the buildings you pass every single day are funded in exactly this way? Thanks for tuning in.